Today I'll discuss my own favorite free chart patterns that I use daily, and if you want to turn the market odds in your favor, you will watch this video fully. So first off, we got the classic head and shoulders pattern, the left shoulder, the head, and the right shoulder. As long as the head is higher than the left and the right shoulder, it should be considered as a great head and shoulders pattern. But when can we trade it? So the safe way is quite simple. You want to add a neckline or your head and shoulders pattern. After that, you can either wait for a solid break of the neckline before considering entering the trade. If something like this happens, that's considered a break of structure. So head and shoulders neckline has been broken. It confirms bearish pressure and it should continue moving down. So pretty much your breakout trading. However, I don't really like this method because 16.4 pips has already moved. We don't want to miss out on this trading opportunity and we want to maximize our trading gain. So what we do, we wait until it has a push exhaustion back to the previous area of sensitivity, in this case, the neckline. So we had that push, we had that exhaustion. So let's just see what happens. And there we go. Nice push towards the downside. We wait for that exhaustion for a favorable risk to reward ratio. There we go. A nice 35 pips profit rather than entering on a breakout just over here and getting about 22 pips. As you can see, waiting patiently is 13 pips more profit. Obviously, if you kept the trade running, it would have been even more profit. But entering at the right time is super important, and that's why I love the head and shoulders pattern. So the second pattern is double top and double bottoms. I love them, easy to trade them, and very, very profitable. Around 69% profitable in my own opinion. So W formation or double bottom. There we go. Two bottoms, one and two. After this happens, what do we need? We need a neckline. Again, necklines are here. This was the previous neckline, clearly. Area of strong resistance. What happened with this bullish engulfing candlestick? This candlestick over here swallows the red one and closes above the neckline. This is a great trading opportunity instantly to buy, and this is why I love them. So what you ideally want to do is long this position just like that. Obviously adjust your stop loss and take profits to whatever is necessary, and then you take the trade. So I didn't even look at it, just trusted the price action. As I said, 69 to 70% profitable. Very, very good after pullbacks, or very good after a strong downtrend, and then it develops a W pattern. You already know that it should be a nice reversal trade and start going towards the upside, which is lovely. So the last reversal patterns that are great to use are wedges or vegetables. Whatever you name them, it doesn't matter, but let's take a look. Here we have a falling wedge. As you can see, the candlesticks always make new lows every single time. And at the top, it has to make lower highs just over here as well. Sometimes I like to call this the squeeze pattern because the price is squeezing and it's moving lesser and lesser until there's so much pressure building up, it either pops towards the upside or the downside. So that's why I like to call them squeeze patterns. So in this case, the market is trending towards the downside, and since it's a reversal pattern, we should expect a breakout towards the upside, and if it does happen, that's a falling wedge confirmation. So let's see what happens. A great push towards the upside just over here, huge candlestick confirming the trade bias. It should continue moving towards the upside, and it does. It does actually have a pullback, which I always suggest. I mean, if you have such a huge candlestick over here and you just wait for candlestick confirmation, you don't want to enter right here straight away, because the movement will have a rubber band effect. That's what I like to call it. As you can see, 203 pips move on the 4-hourly time frame. You need to wait for that push exhaustion. So push towards the upside, we confirm the break, we wait for a nice pullback to the previous area of sensitivity, and then we are going back towards the upside for potential further gain and actually trading the falling vegetable pattern. And if you'd like to know how to build a small account balance, well, then this video is for you.